morning, everyone watching live here on BAM YouTube. Let me know in the comments which market you are tuning in live from. The Hot Sheet covers what you need to know about the real estate industry in a 24-hour time period. And on today's Hot Sheet, I will discuss what's expected with interest rates, Powell's latest remarks, and the number of affordable listings in 2022. Today is March 8th, 2023. I am Byron Lazine, and the Hot Sheet starts now. Good morning. Thanks for coming back to the Hot Sheet. If you are new to the Hot Sheet, hit that thumbs up and please consider sharing this with one person who could benefit on a 24-hour look back on housing. It looks like I'm in if you've ever been in the airport in Orlando, this is very reminiscent of an Orlando airport. Bobby is saying, yes, no, we are in Greenwich, Connecticut in the Hyatt. It's cold outside, but it's not cold in here. Very beautiful little lobby area. And so had to give a talk up here. But in between that, I've been taking notes, okay? So I got a whole bunch of notes of what happened yesterday when Jerome Powell spoke on Capitol Hill. We're going to get right into it. Let's start with what Jerome Powell said in his prepared statements. Fed Jerome Powell says interest rates are likely to be higher than previously anticipated. And oh boy, the markets reacted to that statement, okay? So there was a reaction early in the morning before yesterday. This is yesterday, before Jerome Powell said, okay, any statements or got on Capitol Hill, you saw the markets going up. You saw the 10-year coming down. Investors were optimistic that maybe Jerome Powell is going to get up there and say, you know what? We've been doing the right things. We're not going to have to be that aggressive. But he said the opposite of that. He said they're likely going to be higher than we've previously anticipated, potentially hinting towards a 50 basis point hike in just a couple of weeks when the FOMC meets again. Okay, he didn't say that, but that is reading between the lines. And what happened? The markets reacted to that. The Dow, the NASDAQ, the S&P, and the 10-year all reacted. Going down, except for the 10-year, went up. Of course, we know what happens when the 10-year goes up, and we'll check in on what happened to the 30-year fixed yesterday. It didn't go in the right direction, okay? And if the totality of the data were to indicate that faster tightening is warranted, Jerome Powell said, we would be prepared to increase the pace of rate hikes. Okay, these were his prepared remarks before getting in front of the Senate. He said the current trend shows that the Fed's inflation fighting job is not over. The latest economic data have come in stronger than expected, which suggests the ultimate level of interest rates is likely to be higher than previously anticipated. Powell said in those remarks, if the totality of the data were to indicate this faster tightening, and we just said that, he would go ahead and do that. Okay, so the December estimate, officials pegged the terminal rate at 5.1%. Current market pricing moves higher following his remarks. That's what happened with the markets that we just discussed, to a range of 5.5 to 5.75%. And so now they're expecting he's going to jack this thing up, or the committee rather will jack this thing up, maybe even 50 basis points. We're at 4.75 right now on the overnight federal interest rate. Powell did not specify how high he thinks they will ultimately go. Of course not, but he is standing firm that we are going to get this down to this 2% long-range inflation number. The preferred metric is to 2%. We're still running right now at about a 5.4% annually, and that's on personal consumption expenditure prices. Okay, so that's what they're really focused on, is this personal expenditure, personal consumption, if I could say, expenditure prices. We've covered a lot of ground, and the full effects of our tightening so far are yet to be felt. So he says some of the stuff we've already done, some of the work that we've put in on tightening the economy has yet to be felt. So there's an argument that says, well, why don't we let that play out? We've had some signs that we've seen disinflation, but the last few weeks, we haven't seen enough. We've seen an opposite trend the last few weeks specifically. That's why we saw interest rates touch down, going back to the 30-year fix at 5.99, now back up over 7, because the market is reacting, anticipating that the Fed is going to get even tighter as they look at these last 3 weeks. We're taking the only measures we have to bring inflation down. Okay, so one of the big measures they've had to bring inflation down is resetting the housing market. Okay. They haven't gone and reset the employment market. They haven't been able to do that. Employment's at its all-time or 50-year low anyway. So they're doing what they have available, and that's going to impact housing. And I've got notes of exactly what Powell said, particularly about housing. You got to listen to everything he said in front of the Senate to really get this. It's not going to be in any articles. I haven't seen any articles or anybody covering it yet. We're going to cover it here in just a second on the hot sheet. So stay with me and hit the thumbs up if you like that. We're taking the only measures we have. Will working people be better off if we just walk away from our jobs if inflation remains at 5 or 6%? So the Fed's argument is that, okay, they've got jobs right now, but they're not going to be able to do anything with that income if inflation remains between 5 and 6%, which is where it's at today. Okay, so their federal interest rate, again, is 4.5 to 4.75 range. I could see this going to 5 to 2.5 when they meet again. That would be a 50 basis point hike on the next meeting. It's why the markets have jumped up so much, or jumped down rather, to close out day yesterday. All the markets went down significantly, almost a full 2% on the Dow yesterday, right? Because they're pricing in a more dramatic position from the Fed that they didn't have previously accounted for. Restoring price stability will likely require that we maintain restrictive stance of monetary policy for some time. So well into 2023 is what I'm reading. A lot of these people thought, okay, quarter one, 2023, it's going to be over from the Fed. Might not be the case. Now, that doesn't necessarily mean what we talked about on the hot sheet yesterday, that the 30-year fixed won't start to cool after quarter one, right? We're going to have to wait and see on this. It's why we're in a volatile situation. Every day, the information continues to change. The historical record cautions strongly against prematurely loosening this policy. So we will stay the course until the job is done. We've heard that multiple times from Powell. Now, let me get into when Powell addressed the Senate Banking and Housing Urban Affairs Committee. Okay. This was him sitting in front of this committee, which is made up of senators, and they were asking him questions. Mr. Warnock from the state of Georgia, he spoke and asked questions of Jerome Powell about the Georgia housing crisis and America's housing crisis overall. He was the only person that I heard do just that. Amidst the housing crisis, the Fed continues to raise rates, Mr. Warnock said, making mortgages more expensive. Okay. He went on to quote NAR, a couple NAR stats, that first-time home buyers are at all-time lows. Also, according to NAR and according to Mr. Warnock, the age of the first-time purchaser is at an all-time high. Okay, so first-time purchasers are older than they ever were before. And so why, he asked of Powell, are you making these mortgages more expensive? It's in what he's saying, creating inflation for those buyers who want to buy an affordable house. Because I don't care what the price of the house is. If their mortgage is so high, they're going to be paying a higher payment, okay? So Powell's response to that was, we need to restore price stability. Warnock said, well, yeah, you're getting price stability on the houses, but it's still more expensive to buy the house. You haven't actually brought down the cost for the average American who is buying a home and using a mortgage. Warnock said, listen, and this is what he said, don't let the cure be worse than the disease. He's saying, hey, what you're doing to fight inflation and reset the housing market might be worse for everyday Americans who want to go buy a house, who want generational wealth, who want to leave something behind for their family, who want to start being able to save and have equity in the place that they live, instead of being somebody at the mercy of giving 33% yesterday of their living expenses to a landlord and not building any fixed savings in that relationship. Hit the thumbs up if you agree you want more homeowners in this country. When asked about all these people with a 3% interest rate, really interesting response from Powell here. Warnock said, hey, all these people with a 3% interest rate or lower. We've been talking about this a bunch on the hot sheet. What are they going to do? I mean, they can't go buy a house. They're sitting in a 3% interest rate. Powell, exact quote. I wrote it down. Well, I would assume none of them are moving. Way to go, Jerome. Way to go. Thanks a lot, Jerome Powell. It's what we've been talking about with the standoff, where I talk about the Cold War. Yeah, they're not going to move because they've got a 3% interest rate, or they're not going to sell that house and put it out there as inventory because, even if they go buy and they can go buy cash, why would I want to give up the asset of a 3% interest rate? It's not going to be until we get interest rates down closer to 5%, where it's like, okay, I'm at 3%, but I really want that house. 5% is not too far off, where they're going to put that inventory on the market and move up, right? It's not until then that we're going to see more transactions come back, or maybe the federal government can help us get some more inventory onto the market. So if we get more supply, we'll bring prices down there. Warnock said interest rates are making it more expensive. And he also said, and I thought this was very interesting, good job, Senator Warnock from Georgia, where he said, listen, Jerome, is it okay, we need more supply? Well, aren't these interest rates also making it more expensive for builders to go build? Wouldn't that be true? Yep, that would be true, Mr. Powell said. So your interest rates making it more expensive for the average American to buy and for that investor builder out there to go put an affordable product onto the market. So has Jerome Powell, has the Fed gone too far the other direction? I'll leave it to you in the comments. Let me know what you think. Have they gone too far here? And are they going to cripple the housing market for a period of 1 or 2 or 3 years until we can get these interest rates low? Is this going to be too big of a shock, of an impact, and for too long to bring affordability back to everyday Americans who want a medium price point home or even a below medium price point home? Let me know based off of that conversation between Senator Warnock from Georgia and Jerome Powell that I just highlighted for all of you. A big highlight right now is this affordable housing, and 21% of home listings were affordable in 2022. Yes, only 1 out of 5 homes in 2022, according to a new Redfin report, were actually considered affordable. That's down from 2 out of 5 in 2021. So you can see based off of the last back and forth in Capitol Hill that we just went through, and based off of this trend, 2021, 2 out of 5 homes were affordable. Now, the last year, only 1 out of 5 homes were affordable, according to Redfin. You can see where this trend is going. That, okay, one day, Bobby, you're looking for a home. 0 out of 5 homes will be considered affordable. Way to go, Jerome. Or maybe it'll be a half a home. Maybe you can buy half a home someday, Bobby. Only 9% of homes for sale in 2022 were affordable for the typical Black household. Less than a third of the 28% affordable for a typical white household. So we also have that going on. The decline in housing affordability is due to high mortgage rates, persistently high home prices, and low inventory values. I've got a couple of charts that we'll go to. They're down below in your daily download. You can get all of our sources and all of our charts in the daily download below. Okay, 1 out of 5 homes for sale were affordable. So this is 2022, 21%, 40%. I mean, look at these numbers from 2013 to 2021, all above 40%, just outside 2018, 37%. What's unique about 2018? First one to answer in the comments, Bobby will send you something. He'll send you a Starbucks gift card. First one to answer. What was unique about 2018? Okay, it was interest rates popped in 2018, right? So 37%. So we see every time these interest rates pop, not to the level that they were today, but every time they do go up, we do see that affordability comes down, and we're trending in a really bad place right now. This is obviously according to this Redfin analysis of MLS data, U.S. Census Bureau, and Freddie Mac, PMMS. Way to go, Redfin. Way to put it all together. The phrase for today is way to go. Hashtag that. There you go. I never say hashtag that. That is awful. Don't ever say hashtag that in any of your content. We're 8 weeks into the hot sheet. That was the first awful, regrettable phrase I've ever made. Hashtag that. Affordable home listings fell 53% in 2022. Okay, so these are things that I probably would consider educating a first-time home buyer on, who's like, they're buying in a medium price point, and they're like, well, gee, I don't know. It sounds like a lot of money. Hello, you're in the affordable range, medium price point in our local community. You're going to be okay. Remember what we talked about yesterday? There's Zillow economists that Zillow put a study together, optimists that think by 2027 that we could have home price appreciation at 40% again. It's going to happen in those price points. If you can get a median price point home in America today or under median price point home, and it doesn't need a whole bunch of stuff, it just needs maintenance and some minor repairs, go and get that. Okay, so these are the charts that you can show to a first-time home buyer who absolutely has fear. They're making a big decision. They're making a huge purchase, and you can ease those concerns by saying, hey, you're only 1 out of 5 homes are affordable. You're in a power position if you own that asset. And by 2027, you're likely to have appreciation. That's what the experts are saying. And that's the value of buying something that's well below the median price point. Okay, so the 3 factors that are behind the housing affordability crisis, we know, are these rates, are these home prices, and low inventory. So if you can grab something in this environment that is priced median price or below, you're going to be in a very good position. Taylor Marr sums it up. Redfin Deputy Chief Economist. Housing affordability, a lowest level in history. Okay, so this is the lowest level for affordability. So going back to Jerome Powell, have you made the right decisions, Jerome? Which will widen the wealth gap. Yeah, this is what happens. This is what happens when you put Americans in this position, when the Fed does this. The rich aren't going to be that impacted, but people that are really trying to get it going for their life, they're going to be impacted, especially between millennials, said Taylor Marr. Many millennials were able to buy their first home before or during the pandemic. Home buying, boom. But many others were priced out of home ownership and forced to keep renting. That means a lot of young adults missed out on a major wealth building opportunity. The value of homes owned by millennials has risen nearly 30% in the past year. There you go. That's what's going on in the world of real estate, in the world of the Federal Reserve, and all the good things they're talking about on Capitol Hill. At least they did talk about housing today, among all the other crap that they spend time on in Washington, D.C. Let's take a look at where the 10-year closed out yesterday. Quickly, it was up. Just like I said, the markets are down. 10-year was up, which means that yesterday the 30-year fixed closed out over 7% once again. Yes, according to Mortgage News Daily and the daily survey, we are back up over 7% at 7.03% on the 30-year fixed. If you want to get the last live video in with the broke agent, Eric Simon, before he's a married man, that's happening today at 1:30. Eric, the broke agent, along with Matt Leonetti, the funniest man in real estate, and Brooks Landry, the biggest wannabe funny man in real estate. These are Instagram, I'm not going to call them experts because that would be giving them too high a praise, but they know what they're doing on the app. They know how to help you position your Instagram in a powerful way in 2023. They're doing a live webinar. It's not going to be on this channel, so you got to sign up for the link below. It's going to be a private Zoom webinar that is sponsored by Boomtown. Okay, so if you want to go jump in there, jump in the link. They're going to be just taking live questions on how to grow your Instagram this year. And Eric, I know you're all nervous about your wedding. Can't wait to see you in Arizona. I will say, just so you don't get mad at me, you are an Instagram expert. Okay, so there you go, Eric. Way to go, Eric. One more way to go to close out the show. I'll see you back here tomorrow live at 9:30 a.m. Eastern. Live from Eric's wedding. I'll be in Arizona bringing you the hot sheet live. I can't wait to do it. Until then, toodaloo.